The current month of January is not a delivery month, and I think we're at 35 or 40 million ounces standing for delivery. That is the largest January delivery ever. Normally it's, a million, 2 million, 600,000. It's like nothing. There's historically no deliveries get done in January. So for 30, 40 million ounces to be delivered in January, that's outstanding. I mean, it's an outlier. A big delivery month is March. So March 1st, we get first notice day and we'll find out what starts to stand. But what's happened over the last 2 or 3 years is that you start with, let's use the number of 100. You start with 100 contracts standing for delivery the first day of the month. And by the end of the month, you might be up to 200, 300 or more contracts standing for delivery. It used to be the other way around. You start with 100 and you end with 7.
According to precious metals analyst Bill Holter, January, traditionally a non-delivery month for silver, has seen an unprecedented 35 to 40 million ounces standing for delivery, the largest January total ever recorded. Historically, January deliveries barely reached 1 to 2 million ounces, if any at all. This dramatic shift highlights a growing preference for physical silver over paper settlement. Holter notes that over the past 2 to 3 years, delivery demand has increased throughout the month instead of declining, signaling mounting pressure on the futures market. With March approaching, this trend raises serious questions about silver supply tightness and long-term market stability. Now, we present the clips from Bill Holter's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
I would stick with silver and gold. They are more money. I mean, gold is pure money, but silver is more money, has a monetary history compared to palladium and platinum. There are no currencies anywhere on the planet to put your quote, your winnings if you were to sell gold or sell silver. So, okay, let's look at other assets. The only other asset that I can think of would be if you live in a city, you're not going to survive when this thing goes down. You've got to be outside of a city. You've got to be rural. So if you've got big winnings in gold and silver, take some of those winnings and relocate yourself and get the hell out of Dodge. The current month of January is not a delivery month, and I think we're at 35 or 40 million ounces standing for delivery. That is the largest January delivery ever. Normally it's, a million, 2 million, 600,000. It's like nothing. Historically, no deliveries get done in January. So for 30, 40 million ounces to be delivered in January, that's outstanding. I mean, it's an outlier. A big delivery month is March. So March 1st, we get first notice day and we'll find out what starts to stand. But what's happened over the last 2 or 3 years is that you start with, let's use the number of 100. You start with 100 contracts standing for delivery the first day of the month. And by the end of the month, you might be up to 200, 300 or more contracts standing for delivery. It used to be the other way around. You start with 100 and you end with 7. Now we're starting with 100 and ending up with 200 and 300. So what we're witnessing is contracts are being bought during the month with the express intent of taking delivery. And March, the month of March, that delivery month very well could be the failure to deliver because there's only 120 million ounces available to deliver.
And that's on the silver front. Do you see any danger on the gold side?
No, gold is not as tight as far as the deliveries versus the available inventory. But I mean, it's the same thing. You've got constant demand from central banks. I forget which central bank overnight announced they're going to buy another 150 tons this year. I mean, it used to be, if you go back to the year 2000, it used to be people would wait for announcements from central banks telling us how much gold they were going to sell. And of course, it pretty much ended in 1999 with Gordon Brown. They called it the Brown Bottom, where they sold, 60% of Britain's gold at, I think the number was $280 an ounce or something like that. So it used to be that central banks were sellers, but now they're buyers. They're buyers all over the world. Western central banks, the Eastern, all the BRICS central banks, they're all buyers. So the demand is there because central banks are fearful of a credit default because gold is the only monetary asset that they hold that cannot default.
Precious metals advocates argue that gold and silver remain the ultimate forms of money, with silver holding a deeper monetary history than platinum or palladium. Recent market data underscores this view, as January, normally a non-delivery month, has seen 35 to 40 million ounces of silver standing for delivery, the largest January figure on record. This abnormal surge suggests contracts are being purchased specifically to take physical delivery, increasing pressure on available inventories. With March approaching, concerns are rising about a potential failure to deliver, as only around 120 million ounces are reportedly available. While gold deliveries appear less tight, relentless central bank gold buying worldwide highlights growing fears of credit defaults and reinforces gold's role as the only non-defaultable monetary asset. Let's get back to the interview.
In North America, you have people that bought, and junk silver is an example. You got people that bought in the 70s and 80s, and that was really the only way to buy. And they sat on it for years, and now they're finally above water, and you've got big sellers. North America has not caught on fire yet. Now, I'm surprised it's not, but it has not caught on fire. There was nobody out there saying, warning people, nickel's going to fail to deliver. Now you've got the monetary assets, gold and silver, and I believe it will be silver first. If those fail to deliver, then you've got a real problem, because those are money that compete versus the currencies that these central banks are able to freely print as much as they want, anytime they want.
So what do you think they replaced the existing system with?
Well, the BRICS are telling you that they want to replace and no longer use the dollar. They want to use the unit, and that's going to be between 20 to 40% ratio backed, not convertible, but backed by gold, and then the rest with other commodities. They want free and fair trade, and they want real settlement. And if you're settling in a currency that does have backing of real assets, that's a real currency. There are no real currencies on the planet today. I do believe that the US will probably go, I think it'll definitely go into a central bank digital currency. And somehow, some way, they're going to say, well, we have this gold in Fort Knox that's going to back it. And, gold's whatever, pick the number. 25,000, 100,000, whatever the number is, be able to ratio back the currency. The problem is, I don't believe that gold is there. And I think the world doesn't believe the gold is there either, because there's not been an audit since 1956. And I could envision China just hauling dump trucks into their national stadium and going along with a camera and saying, see, this is gold, this is gold, this is gold. And they count the trucks and they say, we got 35,000 tons or whatever the number is. Dollar is toast. It's completely collapsed. And then who's going to trade? Who's going to trade with the U.S.? I mean, if we're taking in a trade deficit of $500 billion or $1 trillion a year, who's going to send real goods for a currency that they know is shit? They're not going to do it. They'll just stop trading with the U.S.
Market analysts warn that silver may be the first monetary metal to face a failure to deliver, a development that could expose deep flaws in the global financial system. In North America, long-term holders of junk silver are beginning to sell, yet broader public interest has not fully ignited. Unlike industrial metals such as nickel, a delivery failure in gold or silver, true monetary assets, would pose a direct threat to fiat currencies, which central banks can print endlessly. Meanwhile, BRICS nations are openly pursuing a new trade system backed by gold and commodities, contrasting sharply with Western plans for central bank digital currencies. With doubts surrounding U.S. gold reserves and no Fort Knox audit since 1956, confidence in the dollar continues to erode. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.